I mean, a slow trading day for equities, but we're told in general the trend is people exiting equities, preferring fixed income because the returns are a lot better than what we're seeing. Is that what's informing the market today?
Yeah, the market closed lower today again, as against what happened between Tuesday, Wednesday, and then Thursday. After those 3 days of a positive close in the market, we actually thought that it was going to be a mild bounce back, at least, from what had happened since the release of most half-year financial results from most institutions. We've seen prices basically move from where they were a little bit up, basically because investors and speculators thought that prices had rock bottom. But right now, it shows that profit taking is, being prevalent over long-term investment.
All right. Well, if fixed income is the lucrative market, let's focus on that then for a second. This week, we got the July inflation figures down to 9.4%. Now, obviously, monetary policy is working, but core inflation, Bankole, is still above 11%. So there's still some threats. What are the things that authorities need to look out for?
Okay, just like you said, the monetary policy rate had been increased more than twice this year, since June. We've seen it move from 8% levels to 8.5% and then 8.75%. This itself had had an impact on what inflation had been. Inflation had dropped from 12 levels to 10.4, and then now we have it at 10.2 to 9.4. Basically, what's happening now is that CBN will try to keep a balance between not tightening the market and liquidity the market too much, and then keeping inflation at single digits. The CBN governor has achieved his aim on the short term, that's having inflation at the single digit, but leaving MPR at 8%, 8.75%, or increasing it may further tighten credit issuance to SMEs and then companies that might need credit. This is past half year, and then we're not seeing the best of results from most companies that declared half year results. And so in order to keep that balance, the CBN may have to review the current MPR, basically. I'm sure it won't be a drastic reduction in order not to drive inflation up. We understand that core inflation is at 11%.
Right. Let's talk about federal government bonds. There have been issuances for 3-year, 5-year, and 10-year maturities. How's that impacted on liquidity in the system? How much was sold?
Okay, these auctions were done on Wednesday, same day liquidity actually came in. Federal allocations came into the system on same Wednesday. So we didn't see a bullish trend at the auction. We saw yields go up compared to what they were at the last auction last month, except for a particular maturity, the 10 years that was reopened, 5 Series 2, we refer to it as. We've had an appetite from especially PFAs and other non-banking financial institutions showing interest, because it's of course not as long in tenure as 20 years, but the yields are very close to what 20 years are doing. So fine, if you want to do medium-term, long-term investments, it's actually very, very attractive.
Right.
And what we've seen basically is that the government is trying to mop up this money that came in on Wednesday very aggressively. They had issued OMO T-bills. That's at Tuesday, and then it was 100 billion. We saw yield for 14-day, 15-day treasury bills go as high as 8.5. Meanwhile, T-bills in the secondary market of the same maturity traded below 5%. So it showed that the investors and speculators knew that the government is quite desperate and trying to mop up money.